All right, guys, welcome to the channel once again. So we had a little bit of a weird thing occur today. So I recorded the recap and everything of the New York session, and it's, as you can see, 8:35 p.m. on Wednesday. It's dark outside. We ended up trading a bit of the Asian session. We had some good mean reversion trades, and I thought there were some opportunities. And as you can see, in this little session, we are just above $1,000 on the beginning of the Asian session, putting the account at around 8.1K. So before we go into the stats, I just quickly want to talk about this because this is, I guess, would be interesting. So this is called a volume profile. If you're on Ninjatrader, any sophisticated platform, you can draw order volume profile, and it's very useful during mean reversion days, which are just called trading ranges. But what I ended up doing is I plotted this area, and we're pretty much trying to get back to the POC. So every time the market, before the POC was right here at this level, but as you can see, push down, trying to go long at the bottom, long again. This was a losing trade, but we push up higher, trying to get back down, short here, short here, short here, which is really good. And then on the bottom here, we had a little long trade. So we're sitting at about $1,000 on this Asian session. So let's go into the stats real quick because I'm gonna have to recap all of this. So this is where we're at in the challenge. Started January 21st. And right now it's February 4th. We're looking at a bit over 3.8K, but minus the commissions, we're around 3.1K, which is putting us at around 63% up on the account, sitting at a 67% win rate, which is not too bad. So in about 100 trades, we're sitting at, again, 3K, which is expected value of $30 per trade, which is pretty good if you know expected value math. And that's also including the fact that in the beginning we were only trading one contract, and then we scaled to 2 contracts, and now we're trading 3 contracts. Something I want to talk about real quick before we go into the strategy portion, which today is going to be a little different. I actually want to tell you what my strategy is. So I'm walking you through the guidelines for the strategy, what we look for, and I think it's going to be really interesting for you guys if you are beginning to trade or trying to learn how to trade or whatnot. And that stuff I recorded that stuff in the morning actually, and I didn't expect to be trading this late, but I had to include these gains in here because Ninjatrader likes to, on the tracking platform, it likes to track things as calendar days, not future sessions, which is the 5 p.m. to 4 p.m. So it tracks it as calendar days. So I had to include this in here real quick. What else? I think that's about it. All right, one other thing before I quickly go back to the recording from this morning is we've had a little bit of drawdown a couple of these days. As you can see, equity curve is going down, and usually we're pretty smooth, scalping high probability. And as you can see, we're now going up pretty smooth, scalping high probability. Sometimes the market cycle is in a place where there are a lot more traps. This occurs pretty frequently. We go through phases. The market goes through phases, and it's, not every strategy is going to work in every market. For example, if you're a swing trader or a trend follower, you're not going to be able to get any trades or any profitability during days where we're in a heavy trading range or high congestion. Similarly, our strategy relies on clean entries, clean price action, and sometimes you get the market will give you seemingly good setups but it'll trap you quite a lot. And it's a natural part of trading. That's why we have risk parameters. I mean, just look at this. Like, what is it? February 4th. Like in just today, we have. I mean, a lot of this gain is from today. We've gone from $1,200 up to almost 4,000 in just today. So the market gave us a very good day today. We had 2 days of losing, which with the 3 contracts is only $700, and we've made huge gains today. I think today, from morning start to now, we're up around 2.6K, which is pretty huge, and we're gonna keep the gains rolling. Hopefully, the market will convert back. But let me show you what I mean by market structure. So if you go to let me delete this. If you go to even the daily chart here, and you zoom in, clearly there's some things occurring here. Like you can just tell, the market is a fractal, and what that means is that price action works the same. The strategy we use works the same on all time frames, on all tick-based charts, range-based charts, all charts. And as you can see, we're getting a lot of chop on the daily chart. So every bar here is a day. We're getting a lot of chop on the daily charts, and so obviously intraday we're going to have more chop as well. As you can see, some of these, like I remember trading this. This was like earlier a few months ago. This was very clean price action. I do remember trading this time, and as you can see on the daily chart, it's also clean. So right now, the reason why we're getting these choppy days is because on the daily chart, in the macro sense, we are chopping. So another interesting thing that I wanted to throw in there. So let's go through the actual strategies, and I'm going to show you in the market where these setups exist. But this is, I mean, if anyone follows this, you probably, as long as you've had experience trading and you manage your emotions, you probably will make money. So here we're looking at the basic scalping strategy. So it's all scalable, but I recommend that, and this is actually, I made this like a little while ago. I think it was like a couple of years ago, and I've been following it ever since. And I made this at a time where I wanted to keep things very basic because I like having a game plan in my head to like implement. So for this, technically, you would want an account size of $10,000. We're obviously trading this $5,000 account, but it's because I have experience doing this. So you would ideally want a $10,000 account for one contract. If you're trading the micros, you could do it with $1,000 and trade one micro, but the micro commissions are pretty bad. So I would watch out for that. It makes the strategy the expected value of the strategy go down a bit because the commissions are eating into your gains. So the expected value drops, even if like the probabilities are the same. But so we're trading the ES, the S&P 500 futures contracts. We are using a chart of 1,000 to 2,000 tick, and it depends on your ability to size risk within the bar, meaning sometimes the bars are a little bigger. So on today's day, in a day like today, if you just look at like the average size of a bar, so like let's just take this bar. We have 83.25 to the high of 850. So this is about a 5-point bar. So you're not able to all the time size your risk within that, because again, in this strategy, you are using a sorry, I just realized that document we had was an older version. So this is the updated one. The thing that I was saying is you want to be able to size your risk within the bar using the charts. That's what this means. But this specific strategy, and you'll see the difference, but it's meant for volatility of low to medium. And the reason is the only difference really here is your risk is smaller and your reward is about 1-to-1 or 3-to-2, depending on the area that you're trading. Here again, the daily loss limit is about $250, which is 2.5% of your account, which means in theory that you would have to lose 40 trades in a row to blow your account, which is not realistic with this risk to reward. So you stop trading absolutely if you hit a loss of 250, preserves capital. Sometimes, again, the market cycle, the market structure isn't the most conducive to any one strategy. For example, you can't swing trade or trend follow on a trading range day. You'll surely lose money. So again, the market structure impacts your strategy. And then daily profit limit none, which is because you want to create, as you'll see, as you saw today, we had some losing trades, but in the last few days, but we had a big winning day here because we do not have a daily profit limit. We try to maximize our winning days so that we can make up for many losing days and even get it back into profit. Here is the runner option, which if you're a beginner, you probably don't want to do this because it does ruin your expected value. But I threw this in here because what you want to do is you want to, if you are at a point in the market, for example, like let's assume that you are trading and you see this triple top, so 1, 2, 3. So you're here, 1, 2, 3, and let's say you short this bar. You want to be able to capture some of your profits on the scalp portion, but then leave the rest as a runner. So the way you do that is you pretty much, so let's say, and let me go back to this. So it's only in lots of 5, and so let's say you're trading 5 contracts. What you want to do is you enter here, let's say, and you scalp out 4 of the contracts for a profit right here. So you make this difference. And then you leave 1 contract as a runner in case the market does go further in your direction. And this provides right skew. Right skew is pretty much increased expected value in certain market conditions, which can make up for many losses. And it's a great strategy to implement with the right type of market and when you have an understanding of where you are in the current day cycle. So once you exit the 4 contracts, you have 1 contract that's still running, and you can move your stop loss to break even. So if you entered here, right here at let's say this red line, and your stop loss is right here. So you scalp out, you exit with 4 contracts of profit here, and you take the stop loss and you move it to break even. So had you entered here and you scalped out and you had 1 contract running, the market never came back to hit your break-even price, and you got to capture all of this gain. And if you held for even longer, you'd still be in this, but you want to be able to maximize expected value in that way. So that's pretty much what the runner option is. Again, you never want to trade this on tight trading range days or congestion. And on those days, you just full exit at profit target, because the probability of the market coming back and hitting your break even is very high, and your expected value then drops. And the reason why it's only in lots of 5 is because, so let's say you're trading 3 contracts and you are risking 3 points. You're risking $450 per contract or per trade. And if you scalp out with 2 contracts at your, let's say 2 to 3 points, let's say 2 for now, you stand to make $200. And then let's say your 3rd contract is your runner and you get hit break even. So now your expected value changes again if your runner is hit, because your losing trade is the full loss of the 3 contracts at $450, but a winning trade without a profitable runner yields you only $200. So your risk to reward is more than 2 to 1. It's 4.5 to 2, and so it's just not conducive to good expected value. So but in contrast with lots of 5, you can do the same math. So let's say you're trading 5 contracts and you're risking 3 points, that's $750. even if you scalp out of 4, you're making on the 2 points, you're making $400, which in 2 trades you can win back and you can be in profit. So it's all an expected value game, but the runners can increase expected value in the current market situation. Like I said, in a day like today, if you were to look at some of these trades, like if you were to go short here, scalp out, stop is above here, now you scalped out, your stop comes back here, you could have captured this whole move. But this also requires you to be very patient and wait for good opportunities to really enter. So that's that. So for this strategy, because it's low to medium volatility, you want to use limit orders. I said this in the last video, but if you even save 1 tick per trade on limit orders, you're in theory saving money in the long run. And you are like if you save 1 tick on 12 trades, you're in theory saving and you risk 3 points, and there's 4 ticks in a point, you're saving a whole losing trade worth of ticks just by saving 1 tick on every 12 trades. So limit orders, you also enter on the break of a most recent high or low, and then again we said this, and then do not chase if price moves 1 point in the direction of profit, because sometimes it'll move in your direction and then come back and you'll enter and it will stop you out. So exit style, as a beginner, you just want to enter a trade and either you are profitable or you have a losing trade. This is something for more experienced people, but as a beginner, I would not even worry about this. So now here's the interesting stuff that I think you guys would like, the setups. So low to medium day, you're looking at 2-legged pullbacks with the trend off of the EMA, broad channel or trend day with direction of order flow. So you've seen this in the other videos, but let's look for one in today's trading. I think I took one pretty early in the day. Let's see. Yeah, right here. So again, what you have here is a very strong downtrend, and then you have the market pulls up, it makes an attempt to go lower, pulls up again, and then makes an attempt to go lower, and you enter right here. So let's zoom in a little bit here. So this was my entry. So what I mean by 2-legged pullback is the market likes to move in twos. So it'll try to attempt to do something twice. So here you had a pullback. We're still below the EMA, so confirmation that we're still bearish. Comes back down, and then the market pulls up and then comes back down again. So this right here, when this bar went lower than this bar, that's what's known as a first entry. And what we're looking at is a second entry, a 2-legged pullback, which is a higher, it's more probability and is a higher, there's a higher chance of trend resumption. So as you can see, we entered on the break of this bar as we went lower, and we went for our scalp and we got filled here. So this was the trade, trading 3 contracts. We made 2.5 points off of this. So that's just an example of that kind of trade. Sorry to jump back to something else. I just want to, like, we were talking about the market cycle and how sometimes there are days that are not conducive to your strategy. I just want to point out a few things. Just look at this area, micro congestion, not conducive to the strategy. These are the kinds of days we've been having, which there's a lot of traps in here. Micro congestion here. You can say micro congestion here, definitely congestion here, this entire thing. Congestion here. Even here, there's some kind of congestion. If you look at this again, like these are days that are a little harder to trade. And on top of that, there's higher volatility. So just want to throw that out there. Trap traders in the direction of the trend. So what that means is there are times, I mean, this is a little more advanced, and there are videos out there that can explain this better. But what a trap trader is pretty much someone that entered at a point that looked good at the moment, but now the market is going against them and they'll have to exit their position. So perfect example is right here. If you look at this, the market was slowly moving down. We had absorption of selling and then a big push up, huge push up. So it's reasonable actually for anyone to enter right here. If as long, I mean, it's a big risk, but people do trade like that. You could have just entered here looking for a swing higher. But people that enter here, they had a lot. It's not just these people. These people also probably buyers entered here, buyers entered here. Even on this second attempt higher, buyers probably entered here. So you have to assume that there's a lot of buyers that are trapped here. And actually, we can even show this. Let me show this. So if you lower this, let's say 75. It's going to have to calculate. There's a big volatility. Yeah, you can see that here. So buyers entered here. If you drop it even more, why don't we just drop it even more? There's probably some stuff here too. I mean, just look at this. Yeah. So this is exactly what I mean by trap traders. So there were big buying orders coming in here, big buying, big buying, big buying, big buying. And they're all trapped here. And then the market could not even get past this most recent high and it reversed. So this is a very good short trade, because what you're doing is you're pretty much, the market with a lot of effort from the buyers is not going higher. And so they're trapped and they'll have to exit their positions at a loss, which will cause additional selling. Because again, if you're long and you exit your position, you are selling your position, and then sellers are also coming in. So this is a great short at this level. And as you can see, the market continued exiting. And if you look at, if any of these traders went long here, you can see these are most likely them exiting their positions as we're on the down move. And even here, if you went long, like I said, here or here, and your stop loss is down here, you can even see that this is them exiting their stop loss. And ironically, the market did pull back up. So that happens a lot as a liquidity test. So that's very, that's a good trade. So that's what I mean by trapped traders. I'm going to put this back up. That's what I mean by trap traders. So again, you want to use the EMA as confirmation. You want to use order flow as confirmation. And then on trend days, you want to only trade in the direction of the trend. And then on broad channel days, you want to only buy low areas and short high areas, because you want what I mean by that is, again, if you consider this to be a broad trading range, you want to be looking for shorts up here and then looking for longs down here. Again, this would have been a pretty good long because we just went low below this area. And then we pushed back up with some force after these two bars. I was eyeing this, but I did not trade this. But that's what I mean. And then you guys saw this in the previous video, but the strategy for risk management, if you have a loss as the first trade of the day, you reduce size to half for the next trade. And if this trade is a loss too, then your daily loss limit activates, you stop trading. And then if your second trade is a gain, then you just pretty much have to ensure that you can trade your full size again with the next stop loss and then trade again. Sometimes you might have to trade 2 trades of half size to get back to break even or in profit. And then again, you can trade full size, but this limits your risk. So the second strategy, the only differences here is, again, you medium to high volatility and you're going for bigger rewards. So this is how we traded today. So the risk is higher. I never risk more than 4 points. It's just not worth it, because the bigger moves that you'll have sometimes are like 6, 7 points, 9 points, and you can make back the losses pretty easy. Because it's higher volatility, your daily loss limit increases, so you have to be careful. Again, no daily profit limit. Everything else here is the same. The only difference here is this. Because the volatility is so high, there's an additional trade setup that we can take. And the trade setup is a strong move, first entry pullback with EMA confirmation, micro trend with direction of order flow. So what that means is that I'm going to show you a trade that I took, which was here. If you look at this trade, this is exactly what I mean. So we had a strong push down, extremely strong. Like bears are obviously winning because you can see big selling orders coming through and they're winning. So this is a first entry micro pullback. The first time a bar went above the previous bar's high in so many bars, and like, what is this, like probably like 10, even higher up there, many bars. And we had a very weak finish. So what I ended up doing is I went short here on the first, again, we're below the MA, the first entry short, and we are being protected by this big selling. So our stop loss goes right here, right above this bar, and we hold. And on this, I think I made, I think about 6 points I was going for, exactly 6 points. And so stop loss up here, and you're going short. And I was actually aiming to see if it could hit the low of the day, but being a little bit conservative, again, within our strategy, our reward is 4 to 7 points. So we are going for 6 points on this trade. And as you can see, we get filled here. Could have made probably another point, the 7 points, but you know, it is what it is. You're worried about absorption at these levels. Like, look at this big absorption, which led to this. So this was a pretty good trade. So those are the two strategies. I thought that I want to explain it with a little more depth so you guys understand. Fading the breakout here. This is listed as on both, I think, as an A- trade. So again, you want to categorize your trades as your best setups that you always want to take, your your decent setups, and then still A's. These are all A's. You're never trying to take a B trade. But these are A- trades. What this means, fading the breakout of a trading range. I will show you what that means. So let's look for an example of a trading range here. So I mean, I guess this is a trading range, but let's look for something. Okay, so this is an example. So clearly here we have a value area high and a value area low. And, maybe it's for this one, whatever, you can just leave it like that. But clearly we're moving sideways during this area. And what you want to do is you want to fade the breakout, because 80% of breakouts do fail, especially on the first and second times. So this was the first time. And at this point, we're not confirming that this is a trading range, but surely at this point, you can confirm this is a trading range. So this is an attempt to break out of this range. So fading the breakout means you trade in the direction to get the market back into range. So this right here would have been a great trade. Another reason why this is a great trade is you have confirmation of selling absorption, and you probably could have gotten a scalp in here. I would like to show another example so you guys know. Let's see. I mean, I guess a little bit of a better example. So yeah, we could just use this. So again, if you just assume this is a kind of trading range, you're unsure at this point, but surely after this many bars, you assume that there's trading range type action. And we break out of this range, there's buying absorption and even more selling, and you can fade the breakout, come back into range. And then even on the downside, again, you had absorption of buying and increased selling, fade the breakout, get back into range. Even over here, so if you extend this, try it again, fade the breakout back into range, again, fade the breakout back into range, fade the breakout, like all of this would work. Eventually, not all trends or ranges stay forever. There will be a successful break. And again, even here, it faded back into the range. But that's pretty much what I mean by that. That's what in the strategy, this means it's an A- trade, because sometimes it doesn't work. And the probability is a little bit lower, but it's still a good trade. And I would look out for those as well. So I'm gonna work on. I'm gonna have to get some upgrades to make these videos. I'm gonna have to get one of those like mics, those YouTube mics, and then also get a a better, like, I guess I'm gonna get an external hard drive so I can record my full trading session, and then I can take clips of it, because honestly, like, it's kind of messing with me to have to click record and then enter a trade, because I'm not used to that, and it's like I really don't like doing that, and it's causing me to make some mistakes, and I honestly just stopped doing it. And also, in a market that's as fast as this, some of these trades, as you saw, are only like 2 minutes, 1 minute, 30 seconds, and they occur really quickly, and I'm not able to you know, really capture anything. But I'm gonna record the full sessions and put them in here. But hopefully, you know, we you enjoyed looking at the strategy. If you have any questions, we can please leave them in the comments and I can address them. But we're looking, you know, decent now. We are up about 42% on the account. You know, the market cycle has been bad for our strategy, but which is unfortunate, because we know we just started this this challenge, but you know, eventually every water finds its level, will even out, and we're going to keep expanding our profits. So catch you guys in the next one, and if you have any questions, please leave them in the comments. Thank you.